Hi everyone, let's cover my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the daily time frame, which is your higher probability scenario, looking for this 5-wave structure. We can either finish wave 4 at the 89k low, or look for a bigger 3-wave corrective structure, a flat, and then look for a wave 5 to the upside. If we consider ending wave 4 at the 89k low, then it ended on top of the 382 Fibonacci, taken from the low of 2 to the high of 3, which is a common target for a wave 4. Your wave 4 here is then counted as a double zigzag WXY, ABC to the downside in W, 3-wave corrective structure in X, and another 3-wave move to the downside in a wave Y, completing your double zigzag WXY. However, a WXY double zigzag finishing a wave 4 in an uptrend only appears in 4% of the wave 4s, meaning a WXY double zigzag finishing a wave 4 is rare. On the other hand, a flat structure appears in 35% of the cases. So if we just look at the data and the probabilities, then the probabilities would be higher to look for a bigger flat structure and then a wave 5, compared to having a finished double zigzag in 4 and look for impulsive continuation to the upside. And just to show you the document as well, or at least a summary that I made myself of all the data that you can download in Discord, the whole research over 10 years of Elliott wave data collection by Rich Swannell and many other analysts, Elliott wave analysts, can be found in Discord in the educational category, which is free, it's open, and then the Elliott Waves channel. There's 2 PDFs, download these, scroll through it, make a summary, and you get something like I have over here. So we have to compare crypto in that document with the stocks data, and you can see over here, this is stocks rising, this is impulsive subwaves, right, the internal wave structure. We have to look at wave 4 over here, and then wave 4, in 4% of the cases is a double zigzag, a DZ, right? But a flat, right, appears in 35% of the cases. A zigzag doesn't work anymore, right? Because we took out the high here of wave 3, right? So at the moment, purely from an Elliott wave probability standpoint, it is more interesting actually to look for a flat structure compared to a finished corrective structure in a wave 4, with the alternative being a double 3. Over here, double 3, which is a sideways WXY in 22% of the cases, which would basically mean W, X, and then a wave Y, and then we look for continuation towards the upside. So just purely based on probabilities are lower for wave 4 to be finished compared to wave 4 to not yet be finished. Now, with regards to a flat, 35% of the cases of a wave 4 and an uptrend tend to be a flat structure, so it's at least interesting to consider flat scenarios, right? So if we then go to the 4-hour time frame, then here on the 4-hour, I have a regular flat for you. So this is the WXY double zigzag in your wave A, right? Then we have a 3-wave ABC in B, and then you need a wave C to the downside, either a diagonal, which appears in 36% of the wave Cs of an expanding flat in an uptrend, or you need an impulse, 1, 2, 3, 4, 5, which appears in 64% of the cases, right? Now this is a regular flat, and an expanding flat is more common, which means a higher wave B. I'll talk about that one in a second. A regular flat retraces wave A between the 0.9 and the 105, which, as you can see, happened over here. So you want wave B preferably to end between these pivots here, right? And then start your wave C to the downside. Now, if you then look at wave C to the downside, currently this structure here very clearly looks like a 3-wave move to the downside. Alternatively, you have to count this as a wave 1, 2, 1, 2, and look for a 3 to the downside. But, you know, structural wise on the lower time frames, this counts better as an ABC to the downside than a multi 1, 2. So the multi 1, 2 is therefore an alternative scenario, which is why this polyline here, this dotted polyline, right, is a lower probability. It's also the reason why I made it dotted, basically. And the higher probability in this scenario would be to look for the potential of a diagonal. Now, it's very, very, very early to look for diagonal structures because preferably you start looking after wave 4s. But this is, of course, at least sharing the idea of a regular flat with a wave C. Probabilities look better for this to be an ABC to the downside, and if this is counted as an ABC, the only option you then have in a wave C of a flat ABC is an ending diagonal structure. So that is where this comes from. Now then, what's also important here is that you preferably finish this wave 2 of a potential diagonal after the 0.382 fib time taken from the start to the end of wave 1, comparing 1 in time with wave 2 in time, which basically means we want this wave 2 to end after the 29th of January, 9 p.m. Central European time. Then you also see a vertical line here on my chart, and that one is also relevant. So the vertical line, the red one, is taken from the start to the end of A. And then you double click here, comparing A in time with B in time. Now, if waves are related in one structure, like a flat, A, B, and C, then preferably your wave B ends at least after the 0.382 fib time, taken from the start to the end of your A, which in this case didn't happen because your wave B ended before the 382. So it does impact the probabilities for this scenario slightly negatively, right? And we have to also consider an expanding flat structure, which is then what you see here on my chart. So in this case, we then have the same wave A, but your wave B is bigger. So here's the ABC, but now we label it a W, then we have X, and we look for a 3-wave move up in a wave Y. Most common target for your wave B in an expanding flat is the 1.236 to the 1.38 Fibonacci, taken from the start to the end of A, 112.9K to 115.8K. And only then do we look for a wave C to the downside, either an impulse in 64% of the cases or an ending diagonal in 36% of the cases, right? An expanded flat is more common than a regular flat, right? But it depends on the subwave structures here on the lower time frames if we can get up this far, of course. So these are two flats that are very important for the potential of a wave 4. And again, wave 4 being a flat appears in 35% of the wave 4s. Wave 4 being a double zigzag, right, appears in 4% of the cases, meaning it's not impossible, right? It's all probabilities. So keep an eye on the flats, right? Now then the bullish scenario. Now this scenario implies that you then finished your wave 4 at the 89K low. So this is then your finished wave 4 double zigzag. So that is then your 4%. And then you count this move to the upside as a wave 1, 3 wave 2, and we look for continuation. And you need this move to go straight up, right? And not necessarily in one straight line, but you want it to move towards the upside to 120. And the reason why 120 is so important is because the moment you hit 120, then you also touch the 1.618 Fibonacci taken from the start to the end of A, which significantly lowers the probabilities for any flat structure. So that is what the bulls would be looking for, and that is why my polyline goes all the way to 120K. Now then on the lower time frames here, you then count a wave 1 or A, alternatively, which is still bearish, but a wave 1 or A, 5-wave structure, meaning a wave 1, 2, 3, 4, 5. Wave 3 is not the shortest because wave 5 is the shortest in this particular scenario. And then we have a W running flat ABC, any corrective structure in X, and then a zigzag down in a wave Y. It is important that this low holds in this particular scenario. You do not want price to take out this low over here. The common target area for a wave 2 or B is the blue box, so that then is respected. And in this scenario, you then look for price to move up. This low is also made after the 1 fib time taken from the start to the end of 1/A, which is what you also like to see. It's nice if a wave 2/B finishes around at 1-to-1, so that all works perfectly fine. But you're going to be looking for price to continue towards the upside and take out the high, right? That is a minimum requirement basically in this particular scenario. Now, if we then look at some of the support and resistance areas, right, and to the upside here, we have some quite important resistance actually between 104.9 and 105.1K. And you're like, whoa, that's actually very small. And it is, but that is where you have a weekly naked point of control. And at that exact same level, also a daily naked point of control, as you can see, both at 105K. So this to the upside is the most important resistance. And then to the downside, I have this support resistance level. I think it looks a bit better on a 4-hour time frame here. That's where I found it. So you can see over here, resistance, right? Support, support, support. And then over here, we had a bit of resistance again. So this horizontal wide box here, 108 or 100.8K to 101.3K is important support to the downside. And if you move to the downside, like this daily naked point of control at 99, it's not really too interesting for me. If you do move all the way down there, then I'd be more interested in the blue boxes that we have to the downside. And this blue box starts between 96.9 and then 96.2, right? So basically the most interesting resistance, 105, important support around 100 over here, the white box. And then to the downside, right, 96 is the first blue box again that I have to the downside. Now, if you then look at the CVD divergences, then on the 4-hour time frame, the bullish CVD divergence that we have over here is still stands. The target for this divergence is the all-time high. On the 1-hour time frame, we also here still have a bullish CVD divergence that hasn't played out. This one over here did play out. We still have a new one here, right? And only when we take out this high does this one also play out. And on the 15-minute time frame, you can see that same divergence as the 1 hour. But if I zoom in just a little bit, then you can see over here also higher low in price, lower low on the CVD. So also bullish CVD here on the 15. The bearish CVDs here played out nicely, but we still have the bullish CVD as well. Now, we also have some news this week. Make sure you trade safe. All right, Tuesday, today, January 28th at 2:30 p.m. Central European time. We have some high impact news. Make sure, again, that you trade safe. Also on Wednesday, Thursday, and Friday, we have stuff going on. And if we then finally look at the probabilities and the polylines, and we zoom out a little bit, right, for the sake of clarity, then on the daily time frame, if we zoom all the way out, the probabilities on a daily time frame are higher for an unfinished wave 4 compared to a finished wave 4. In other words, the probabilities are higher for a wave 4 to end later than this low being the end of wave 4. In 4% of the cases, this low is the end of a wave 4, right? Okay, that's cool. In 35% of the cases, we look for a flat, and in 22% of the cases, we would look for a more sideways corrective structure, right? So these will have a higher probability. But if we then look at the polylines, right, then you can see here that preferably we do move to that resistance, right, impressive resistance. 105K is definitely an area that I am interested in to at least observe the reaction, right? And then from there, you can see that the reaction matters on what comes next. Now, if I would personally put the scenarios into like a certain order, right? So I remove the boxes here. Then currently, a expanding flat, just because an expanded flat is the most common flat structure, this would be then labeled as your highest probability scenario, right? Then you have a lower probability regular flat, right, on the number 2 spot. Then we have the potential for the bullish scenario. Now, mind you that this structure to the upside can be very similar compared to what the expanded flat structure is going to be looking like. So if you move to the upside and take out the all-time high, right, then we got to be aware of an ABC versus the potential of impulsive continuation. And then based on this structure, we will know more, right? Based on that structure, we will know if we look for a WXY and then a retracement again, or if indeed we look for continuation, wave 4 and adhere, and this is going to be labeled as a 1, 2, 3. Now, by all means, and that's also what I write over here, right? Mind you that in basically all of the cases, probabilities are higher to look for more upside in a wave 5. So the directional bias on the higher time frame remains towards the upside. I keep my eye on the 105K resistance, the weekly naked point of control. For a diagonal, you preferably touch that only after the 29th of January, 9 p.m. Central European Time. If you do move up, touch 105K before the 29th of January, 9 p.m. Central European Time. It does increase the probabilities a bit more for the quote-unquote bullish scenarios, basically meaning taking out this high either for a WXY for an expanded flat, right, or a running flat, or you have the bullish scenario and a continuation, right? So it's a little bit detailed, of course, but yeah. Now, I am live during the news at 2:30 p.m. Central European Time, so if you want to hang out then and ask some questions and whatnot, make sure to be there. And yeah, hopefully you found this video very useful and valuable. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.